Hey everybody, it's Pete. Good morning. Welcome to Stocks for Breakfast for Tuesday, April 14th, 2020. Had to look to see what year it is. Every day is just blending in right now. I don't know about you, but I'm really starting to go crazy. And I work from home, so imagine that. I actually work from home. It's just not even be able to go to the diner and have to get away. It's actually crazy. But we have to be smart. Everybody needs to do what they're supposed to do right now so we can get that curve down so we can kind of get back to normal. We actually have a pretty good episode today. We're going to talk, we got some really good questions, some comments, some stocks that you guys left in the, for me to take a quick look at. So thank you so much for that. If you enjoy these videos, if you find some value, it would mean the world to me. If you can click down and subscribe, you'll get updates. But I want to start out first. I'm going to do a little bit of chart reading today with showing you what well bid and well offered is. I keep using my hands every day. And I want to make it very clear so that you can go and look at any chart and say that kind of makes sense. If the smart money is holding higher bids and creating higher highs, it makes sense. And I'm also asked, where did I come up with that from? If you happen to not have catch that, if you didn't happen to catch it in a previous video, I'm not sure which one it is, but back in the day when I first started trading in April of 2000, right after the internet boom, pretty much that was the top. We would start trading. We'd use level 2 boxes, which are basically quotes and depth of everybody placing bids and offers. And back in the day, that was prior to a lot of the electronic stuff that we see happening going on right now. And Goldman Sachs would go to the bid, or Merrill Lynch would go to the offer, or Smith Barney, or Madoff back in the day. If they went to the bid, so let's say I'm advertising to bid, and in time and sales where you see the actual trades going off, if Goldman Sachs was at the bid, which is GSCO in the level 2 box, and a lot of selling was going on there, so a lot of red prints were hitting the bid, hitting the bid, hitting the bid, and that's trading terminology, or write that down. If a lot of trades were hitting the bid and Goldman just stayed there and kept refreshing the quote, let's say at that time was 50, which actually represented 5,000. So 50 was 5,000, 10 was 1,000. If they kept hitting the bid and he was staying there, you would call out in the room, go whatever the stock is. Let's say Cisco, because that was really popular when we traded back then. You'd say Cisco is well bid, Goldman's holding it up. But as things, and it mattered. It actually mattered because you could feel comfortable bidding there on a different routing network, so a different ECN. For example, back in the day, Arca or Instinet were the two big ones back there, or Island, which doesn't even exist anymore. You would feel comfortable because if you were able to buy on the bid and Goldman or whoever stayed there, you would feel comfortable that the stock was going up a little bit and you could scalp a profit. As things advanced, with all the electronic stuff now, a lot of the bids and offers are done by computers and not actual people. It's still the same amount of order flow going through it every day, but instead of it being one 5,000 share block or one 10,000 share block that was negotiated on the floor of the New York Stock Exchange or between market makers, that same 5,000 shares now, for argument's sake, happens now in 100 share increments, one after the other. And I'm not talking about high frequency trading. That's a whole different animal. So anyway, I kept trying to rack my brain of how do I do that in today's market without exhausting myself watching a level 2 box all day, which it is exhausting. It definitely works, but it's exhausting. And you have to watch that micro thing. Well, you have to watch every print. You're watching for the speed of the prints and all that kind of stuff. By the way, I'm going to actually talk about a book today. So anyway, I kept saying to myself, how do I do this? Because it was an incredibly valuable way of trading where the smart money, the institutional money, the people who move the market are doing something significant. And how do I see that on a chart as opposed to watching level 2? So what I came up with was using the same terminology of well bid and well offered, but then coming up with the concept, the philosophy of, okay, if I'm looking at a weekly chart, or if I'm looking at a monthly chart, or if I'm looking at a 5-minute chart, it doesn't matter. I want to make that clear too. It's not only for day trading, which is why we look at a lot of daily charts. And we actually talked about the SPY and what was going on in the SPY and the weekly candlesticks and how we thought it was still strong until it wasn't, right? And today we're actually pre-market, we're opening higher, we're trading higher. So it's not guesswork. That's the beauty of it. We're not predicting, like say using a Fibonacci level or stochastics or RSI or MACD. And they all have their place. If you're comfortable using them, I'm not going to suggest switching because if you like using something and your eyes are comfortable with using that to read price action, continue to use it. I'm just going to keep preaching that I like to keep it simple. So when you get down to the price action of well bid, well offered, change from the open in multiple timeframes, you start to develop a really good sense of what's going on in the stocks and in your market without needing all of the indicators. And I've just found that it's easy is better because you could make more confident decisions. So we're going to get to that. We're going to actually take a look at some charts. But I'm constantly asking, what books about the market did you find the most helpful from trading perspective? And actually, the most helpful book ever from a trading perspective is this one, which is a trading journal. If you don't keep a trading journal, you're never going to improve. There's just no other way to put it. And here's why I'm going to tell you that. We often trade during the day or trade during the week and we're like, oh gosh, I'll never do that again. Or, oh gosh, that was awesome. And then we forget about it. It's imperative that you pay attention to your own results. It's imperative that you pay attention to your own actions because that's the only way to improve. There's this feedback loop that is absolutely necessary for you to take your P&L, your profit and loss to higher levels each week, each month. Let's say each month. Let's not say each week because it's a lot of pressure. I always thought working hard was the key to success in trading. And I work really hard. I mean, my dad taught me, wake up, drive, go to work, and just grind it out, right? He worked for Con Edison for 42 years in New York City. And you want to talk about, he would sleep in his office sometimes. That's how exhausted he was. But working hard is not the whole picture. It's not. You have to pay attention. You could keep working hard and making the same mistake over and over again and banging your head against the desk and say, I don't understand. Why am I not making money? You have to pay attention. So the feedback loop is research, get it out to the market, get feedback, improve. It has to go in that cycle. But so many of us do research, get it out to the market, and don't pay attention to what do we need to do to improve. So little tweaks here and there make a monster difference over the month and over the year. So anyway, if you happen to catch yesterday's video, one of the things that I mentioned was I love to do this because I feel like I'm talking to people on my trading floor, my trading floor in New York City. Anyway, this is the book I want to recommend today. If you're home and you're going crazy like I am, and you're looking for a really unbelievable read about how the New York Stock Exchange actually worked during its heyday, this book by Charles Gasparino, King of the Club. It's probably 350, 360 pages. But when I tell you, if you're interested in trading and kind of like the lore, L-O-R-E, of what happened on the floor of the New York Stock Exchange, all the screaming and the yelling. And I actually know some of the people in the book because if you know my story, we actually had 25 former specialist clerks and floor brokers in my office at one point in my trading floor. So I read the book and hear it from them in real time. It's pretty fascinating. So anyway, if you love the markets and the mystique of trading in New York City, it's a really awesome book. So anyway, we're going to get into a lot of the stuff that you guys asked me to take a look at. Again, if you have any questions or comments or feedback, absolutely post a comment. I want to start out by answering one. You had asked some questions about bid-ask. I wasn't sure if you were talking about bid-ask in companies in stocks or options because you mentioned options in your post as well. So if you could post another comment to clarify that a little bit, I would appreciate that. So we're going to get into stuff from Jeff, from Craig, and from Wei Zhang, actually. So let's get into it now. We got earnings and a couple of stocks that you need to pay attention to today. So obviously, JP Morgan, Wells Fargo, and Citigroup begin earnings season. You can see they're talking about this for today. So April 14th are the earnings. So just pay attention to which ones and when. JP Morgan and Wells Fargo today. I'm not exactly sure if Citigroup comes out today. I'm still tired. I didn't have the time to look up all three of them, but they all have earnings this week. So that's something to keep an eye on. Interestingly, we had that explosion in price action in JP Morgan on Friday and Wells Fargo, and I was actually looking for them to follow through today. It remains to be seen whether they're going to or not. Now, here's something crucial to pay attention to. A massive spike up like that, massive green candle on bigger volume, and then we pulled back yesterday. Pay attention to the difference in volume between those 2 days. Very big difference. If we exploded to new highs on bigger volume, pulled back on really light volume, that's a light volume pause. You would expect the follow through to be in that direction again. So there's a lot of stuff going on in the world, and the second half of 2020 is probably going to be pretty tough. I mean, which it has to be, just because the stimulus package or not, small town America is in pain right now. So we'll see. We'll see how the financials are going to come out of that. But be aware of what earnings are coming out. Something else to keep an eye on this week is Roku. This is a big deal. Streaming hours grew 49% in Q1. That's a interesting statistic, but as we keep talking about all of these streaming guys, whether it's Disney Plus, Roku, or the granddaddy, which we're going to talk about in a second, because Wei Zhang actually brought up a question about that today, because I touched on it in a couple of videos yesterday, specifically the best stock picks video. Subscriber growth is the big one. However, news, I don't trade the news where I don't, in the sense that I don't predict what I think the news means, but I do want to pay attention to stocks that have significant news like this, or at least something that could give the stock some juice for that day, and it might be something we can trade for a couple of days. So as far as the market is concerned, I just want to get into, if you watched last night's best stock picks, I said, although we hit the resistance level in the SPY, which is the 50% resistance level from the peak to down to the bottom, what we hit a few weeks ago, we did stall, obviously, on Friday, had some selling yesterday, but I also rattled off that we had 0 stocks that meet my minimum criteria making new 20-day lows. 0. That's a sign. So you kind of have to read under the hood to get the whole picture. It's not, what do you look at? One thing? No. Same thing as driving. You'll hear me talking about driving all the time. You're not just looking at your steering wheel, you're putting all the pieces together. The better you can put the pieces together, the higher your distinction level, and the more you move up the scale of making good trading ideas. So obviously Roku is something I'm going to keep an eye on today. Here's where we are in the futures. This is where we closed yesterday in the market, and here's where we are right now. Whether we hold this or not obviously remains to be seen, but so far our tape reading skills are coming to fruition, where we said it was kind of fishy, even though we were down 300 yesterday in the Dow, 300 plus, whatever the final number was. We didn't like it. It just kind of felt weird. Like there wasn't massive follow through to the downside. We didn't close on the lows. And you start to put those pieces together, and you start to move from you're just reading the charts to you're owning the charts. You're tape reading the charts. You're becoming a trader. Again, there's a big difference between chart reading and trading, and that's kind of what I really hope I can impart to everybody. So I'm going to actually go to the daily charts just to really get into quickly what it means to be well bid or well offered. And I guess we'll start right here. Okay, we'll start right here with the E-mini S and futures. We'll just stick with what we're looking at. So well bid if you can now have the visualization of what I said about watching Goldman holding the bid and making the stock move higher, you can see here on this daily candlestick of the ES futures, ES 500 futures, well bid, you can see higher highs and higher lows, higher highs and higher lows. And despite the fact that we closed in the middle of yesterday and it was a negative day, it's still well bid, right? This is Friday, still well bid. And then we went inside yesterday. But you know what? Let me pull up a chart, because I'm not sure if I'm looking at pre-market futures here. So anyway, that's what we're looking at here. So we had inside candlestick, well bid, and this is also well bid and well bid. So you actually had 1, 2, 3, 4 days in a row of well bid. And then you take that to the weekly candlestick, you can see that we had engulfing candlestick. But actually, let's start here. Let's start on the downside, because it actually, I'm going to give you something exciting, and then you're going to get sick to your stomach if you missed some of these ideas. But hopefully now that you wake up, right? So you had well offered, inside candlestick, well offered, right? Now we have bullish engulfing candlestick, kind of like is an expansion in volatility in both directions. Then we went well offered, inside candlestick. So right now we're looking at an inside candlestick on the week. So it's our job. First of all, I want to say the higher time frames always dominate. So weekly candlesticks pattern, and it is a pattern. The whole week is pattern, and 2 weeks and 3 weeks matter a lot more than just yesterday's one candle. So the higher time frames dominate. The lower time frames to fine tune your entry, and then the higher time frames again to give you your potential profit targets of where they can go. So anyway, this is what kind of like really gets you crazy, because there's a lot of, and not crazy, I mean crazy in a good way, that once your eyes are open, you never see the market the same way again. Look at how many weeks in a row of well bid in the SPY. So you spend your time on the daily charts and you're driving yourself crazy on maybe even shorter time frames, saying wiggle and jiggle and back and forth. And you look at it like, well, the thing was up 5 weeks in a row of well bid. What was I doing? Right? That's what swing trading is about when you're really paying attention to it. Now, there's definitely money to be made, and if you have super discipline and focus on the intraday charts and day trading, 100%. But a lot of people watching the videos, they're not day trading. A lot of people watching the videos, and it's probably some of the biggest questions that I get is, how do I use those same principles? Because you keep showing day trading signals. That's my point. My point is, I'm showing you on the day trading charts, the intraday charts, because a lot of people are trading those time frames, but mostly because there's a lot of signals if we're looking at intraday charts, and then you extrapolate those out to using the daily, weekly, and monthly candlesticks to do the same thing. So when you look at a chart of the SPY and you see it's up 5 weeks in a row, well bid 5 weeks in a row, and the only time it wasn't well bid, it went inside candlestick and then well bid again, and you have these weeks of well bid. So there's typically two different accounts that people will trade with when you get up to the higher levels, where you're doing it a lot more actively, where you have your day trading account and your swing trading account. And it's if you can afford it, if it's possible, it's better to have them separate, because you don't want one account messing with your head on the other one. They're separate businesses, really. So anyway, that's well bid and well offered, and hopefully you can start to eyeball your charts and get some really quick wins. But and I'm not saying profitable wins right away. What I'm really talking about is wins in the sense that you start to get this feeling of like, what was I looking at before? Because it just makes so much sense. And that's how it is to me. I hope you feel the same way and get that same kind of feeling, because when you have control over what you're looking at, everything changes. So let's see. Jeff actually asked to take a look at the casino stocks. Jeff, I'm going to take a look at the most popular ones that are in the list right now. Essentially, Win right now for me, I do like the fact that it pushed up and paused and rallied again. I don't like this swing high, which usually leads to declining prices. For me personally, I wouldn't be doing anything in Win on the long side unless it got above 75. For me right now, this is how I basically look at it from a trading terminology perspective. I'm always looking for what's the right price, or is there an imbalance? So if I'm looking at this stock right now, and again, if we're trading in the office together, this is really what I'd be doing. We blipped out of this range once or twice in the last couple of weeks. But to me, that's pretty much the price. We got below this price here, which let's say it's 48, just for argument's sake. Let's say this is 48. It got down there, got right back in there, and up here it's 75. So let's just keep it simple. Let's say 48 to 75. I wouldn't be doing, I'd have alarms set outside of this, especially now because it's almost a 4-week trading range. I'd have alarms set outside of this range and wait for it to trigger before I even looked at it. And in this case, because I want to make sure I'm clear on this, I talked about yesterday buy stops triggering when it got up to a level. I wouldn't be doing that here because there's no order flow in either direction. It's a 4-week trading range. So in this case, I'd set an alert, not a buy stop or sell stop. Would it be a short sale? Well, we need to go and look at the monthly chart to see how we look. So we got 1, 2, 3 months of well offered. Actually, 2 months, right? One month, 2 months well offered. And now it's an inside month. So we're looking for an inside month breakout or breakdown. We go to the weekly candlestick here. We're actually well bid, but we keep failing at that level. And now we have an inside week, like a lot of stocks, and even the SPY we looked at yesterday was an inside week as well. So as far as the daily charts, Jeff, that would be what I'd be looking for in Win specifically. To me, I wouldn't do anything until it got out of the range. That's just the way I'd be looking at it, because I don't want to trade it. Now, the obvious thing that I'm going to get questions about is why don't you trade the support and resistance? Remember, we talked about there's your A-plus trade and everything else that's not your A-plus trade. To me, buying and selling support and resistance when there's no trend, you're really moving away from the perfect trade, because as you move away, and if the only reason for a trade is I see support or resistance, that's not a probability of profit. That simply means you can see your stop loss. So let's be clear on that as a group and as a community. Know what your A-plus trade is. As you walk away from your A-plus trade, that means that the odds of it moving in the expected direction are weakening. And just because you can see support does not mean it's awesome. That just means you're like, if it gets through there, I'm out. All right. Same kind of thing here in LVS, Jeff, and you can actually see it's even worse here because we have all these wicks. It's massive, massive indecision. So in case you're new to the community and the channel, I call these small body candlesticks indecision candlesticks because they basically opened and closed at the same price. So now now I'm really messing with you, right? You have well bid, well offered, inside candlesticks, and indecision. That's all you need to know for candlesticks. Don't read a 600-page book. That's all you need. Now, I'm actually going to do a video on that in a bit. Jeff also asked about some private mortgage stocks. Kind of looks like the same thing there. I'm not going to really get into too much detail because I'm sure everybody's got to get to work. This is interesting. Is there any volume down here? Okay. The reason I pulled that up is I wanted to see if there was a greater spike in volume while it was going sideways in a tight range. And I'm going to do a quick lesson here without saying that's necessarily happening here because the volume is not dramatically higher, although it is a little bit higher, not dramatically. If this volume was a huge spike higher with a tighter trading range, and I'm going to take the volume off the screen so you can see what I mean. You see how tight this trading range is compared to the other one? Now, again, it's only a $10 stock compared to a $75 stock. If after a downtrend and you start to go sideways and the volume gets heavier and a tight trading range, that's generally accumulation where the smart money is starting to buy stock and we start to see it turn around. We actually saw that in, oh gosh, I can't remember the stock. CRWD, is this the right one? Yes. We actually saw that over here. Let me pull up because this is a really good example. You can see here, right here, we started to see the volume. Look at the difference in volume here compared to the volume here. And we said, we have accumulation here. This stock is churning to bounce. And we ended up going from 44 to 64. And specifically, 44 to 64 in about 2 weeks. So really good example there of paying attention to that. And the last one Jeff had said was ACGL. We're going to zoom out and kind of the same thing. Again, Jeff, I hate to sound anticlimactic, but I'd rather be honest with you. I wouldn't do anything in any of these until they break out of the trading range. That's how I personally would trade them. I don't like to trade when they're in a range. I'd rather see a fuel candlestick when they pop out or pop down and then hop on that one. Craig had asked for AUY. Yamana Gold. Wow. Oh, this is, what's actually interesting about this? This is actually good in a couple of different levels here. So we have 1, 2, 3, 4, 5, 6, 7 well-bid candlesticks in a row. So now think about just trade management there, right? Now that I've ruined you and you understand well-bid and well-offered, and now you can help manage trades. Think about managing this position and saying, well, it's still well bid. Why would I do anything? It's still closing above the open, which that's another thing. Well bid and closing above the open and closing above the previous close. That's a big deal, right? But now ended yesterday with a large range candlestick on the 7th day. Here's what I'm looking for in this stock today. And again, it's only a $4 stocks, but we're going to keep this trade in perspective. This is getting up to where what I call a saturation point. So what I'd be looking for in AUY today is I'd be looking for a higher opening, a push higher, and then profit taking for the stock to turn around. So a higher opening, I would be selling, not buying more. So good call there, Jeff. Craig, you gave us something to take a look at. Wei Zhang actually asked about Netflix, which was a big focus yesterday, and I really like that stock again today. It actually traveled 7% yesterday. Really big move, right? And again, if you haven't been watching the videos, here's why. It's a resistance level that goes back to July of 2018. And Wei's question was basically, do I expect it to follow through yesterday? And if you watched last night's video, I do expect it to follow through. That is my game plan. If it opens here, trades higher, and breaks out of yesterday's trading range, I'm going to get long. However, I'm also going to put my stop loss in there. If it goes up and doesn't follow through, I'm going to take a loss. It's real trading. However, if that ends up happening, well, first of all, if it doesn't, I'm looking for the average true range to be a potential profit for a day trade, for a buy in the open and hold to the close, right? Yes, it was a monster move and a big level. So what happens next? That's my scenario for heading into today, April 14th, right? Making sure the day's correct. And then if that does not happen, the next trade should be a bigger trade, which is we need to see it pause on light volume above 385 looking for the next move. And how big is the next move? Well, we would, again, go to the left and take a look and see how big a normal move is in the stock after it pulls back. And so just average here, 340 to 38, so roughly $40 moves for a swing trading move over that shorter time frame. So anyway, that's how I'd be looking at the stock into today. The game plan for today, if it succeeds, if it fails, meaning the price action follows through or not, how I plan to manage it, and then how I plan to manage it over the next 5 to 10 days, and what price action I'm looking for. And hopefully everybody, after that trade in Chewy last week, took a loss and exploded into a profitable trade. Hopefully that you're starting to get that into your head now. And ironically, you had mentioned NEM as potential trade for today, as well as AMD. And believe it or not, I actually did have both of them in my list yesterday, and I had a brain fart. I don't know why I didn't talk about them. Maybe because it was the end of the day and I was exhausted. AMD, I like the fact that it's finally breaking through this 50. Same, very similar, but not as big resistance as we saw in Netflix. But I want to point out this again from as a trade setup. We're an inside candlestick to well bid. So now we have two well bid candlesticks in a row, despite the fact that this was a close below the open and a red candlestick. It's still inside candlestick, well bid. So I am looking for follow through today. So the trade in AMD is look for that opening higher, trade higher, and as long as it stays above 50, then we have some room to go. I mean, you're talking about up to 58, not a bad move for a $50 stock. And I kind of went through NEM there pretty quickly. And again, NEM, same thing. Why do we watch inside candlestick breakouts? Inside candlestick, trend day. This is a pretty big move for this stock. If you could take a look here and see what a normal move is, basically, let's say 44 to 50. And yesterday it went 50 to 59. So it kind of went what it normally does. So I'd be a little less inclined to be looking to get long NEM tomorrow, unless it was a day trade that continues to trade long and above the open, but I wouldn't be swing trading it because it actually reached what it normally does. So thank you so much, everybody, for the feedback. The feedback's awesome. I got some questions about putting graphics on the screen. I'm not 100% sure how to do that. I'm kind of trying to keep it as simple as possible. I don't want to be editing videos all day. I'm sorry. I hope you can appreciate that. Again, the book was King of the Club, Charles Gasparino. I don't know if you can see that. I'll type it in the chat, in the description. Awesome feedback today. I really appreciate it. If you like the videos, click down and absolutely subscribe to the channel. If you have friends that trade, give them the link too. That would mean the world to me as well. And I hope to speak to you soon. And please be safe. That's the #1 thing for us all to pay attention to right now. Have a great day, everybody.